Good afternoon and welcome to this weekend's weekly market update from Time Price Analysis. This is being recorded on Sunday, the 8th of April. So starting as usual with the long-term charts of the US indices, and this is the S&P 500. And going all the way back to March 2009, we've got that low as a cycle degree wave 4 low. And off that low, we have primary waves 1 and 2 in place, and we are still in primary wave 3. So if we come down to the weekly time frame, there's the March 2009 low, the cycle degree 4. There's the primary 1 and 2. And then if we run our Fibonacci extensions up, you can see we're looking up at the minimum 3157 and much more likely up to the 3383 area to complete this primary 3. Within it, we've got intermediate 1, 2, 3, and 4 complete. So we're working on this final intermediate 5, and within that, there are minor degrees, waves 1, 2, and 3 complete. And I think we are still in this minor degree wave 4. So if we come down to the daily chart, there's the top of the minor 3. We saw the sharp move down into early February, which I believe is the A wave of this 4. B back up into the retrace, and we're now coming down in this C of 4 here. Although with the caveat that with it being a 4th wave, this can morph into something more complex, some sort of WXY or what have you. So we do need to be cognizant of that. The pattern can get more complex and then drag out further in time. But at the moment, the two possibilities, we've either got a WX and then we get an A, B, C. Okay, so a WXY is simply an ABC connecting X wave and then another A. So we've got 5 down to here as a diagonal, which actually is very well proportioned and fibs out perfectly. B back, C down. And the other possibility here was that this B came right up and hit the 50% retrace before we saw the sell-off on Friday afternoon in the indices. That can simply be the A of B. So we can get an A, B, C. Long story short, there's nothing for swing traders at this point in time. We need to get the confirmed 4 complete. We can take a speculative shot at it if we hit one of these fibs down here and start to bounce. But in the meantime, it's a question of day trading this, and it's offering most days some exceptional day trading profits. One has to be box clever in terms of playing it. But I think we've done a reasonable job of that in the room of late. So on Monday, I'll be looking to see whether we take this low out here or whether we're going to hold a retrace against this move up and then come up to the 2704 to 2741 region before we get the final drop in the S&P 500. There's another way of counting it where this is the bottom of the 3 in the diagonal and we have an A, B, C, and then we're going to get another A, B, C. So as I say, the pattern itself in a 4th wave is nigh on impossible to predict in advance, but these are the potentials for it, and in terms of day trading it, we just pick each subwave as it comes to get our entries with a tight stop. So we'll continue to be doing that over the course of the next week and then looking for the swing long when we get down into the target region. 15-minute chart, A down, B back, C down if it's still the diagonal. So the key level then we need to watch this week, 2672, and below us 2554. Okay, NDX, if I just come over and start with the weekly chart. So the 2009 low, probably a B, I would think, and then we get a C and then a pullback before up. But it's unfolding off that low as a 5-wave impulsive pattern to the upside. Again, very similar to the S&P 500, primary waves 1 and 2 in place, and we're still within the primary 3. In both cases, by the way, we expect the primary 3 to finish later this year, and then we will start the later pullback. I do not believe we're in the larger degree pullback in the US markets at this point in time. So off the 2, there's the 1, 2, 3, and 4 at intermediate degree, and off this 4, we've got waves 1, 2, 3 at minor degree, and we're still in this final minor 4 before we get the last fifth up. Ideal target above us in the NDX 8200. Daily chart off the three, again, A, B, C. Ideal target down here, but between 6,000 and 6,022 in the NDX. There is a possibility that we have a 1, 2. We spiked underneath the 764, 786 cluster. I think it's highly unlikely. And I think it's more likely that we've got a 4, 5 to come, or the same WXY pattern that I've outlined in the SPX going on in the NASDAQ. And again, same thing, nothing for swing traders yet, still looking lower. If you look at the charts, which I've updated on XLK, that still needs another low, as do many of the technology stocks that we follow. Not all of them, but a good deal of them, certainly. Hourly chart, so this is again what we're looking for this week. The key levels will be at 66.34 and 63.22 below us. So that's the range that we need to see. And this again can be an A, we get a B, C to higher before we drop back down again in the NASDAQ. And detail on the 15-minute chart. Coming down and looking at the Dow Jones, and again, monthly chart. So I've got the lows in April 2009 as a cycle degree wave 4 low. Off there, primary degree 1, 2, and we're still in the 3. So weekly chart off the primary, the cycle degree wave 4 back here. We've got a primary 1, 2, then intermediate 1, 2, 3, and 4. And we're in intermediate 5. Within that, we've got minor degree 1, 2, 3, and we're now in the 4. We still need the fifth up. Ideal target above us, 29,137 in the Dow Jones Industrial. Coming down, looking at the excuse me, daily chart. Here's the 3. Again, A, B, 1, 2, 3, 4, 5. And that fibs out, by the way, absolutely to perfection, down to 22,633 in the Dow Jones Industrial. So that's what I'm looking for in the Dow Jones. Coming over and looking at the Russell. So off the 4, I've got a 1, 2, and then 1, 2, 3, 4, and again, we're in the intermediate 5. And within that, we've got minor 1, 2, and 3 in place. We're still in the 4. So daily chart, there's the top of the 3, A, B, C, and I think in this case, the C could well unfold as an impulse. We've got 5 waves down to here for the 1. This moved back up late last week, came and hit the 50% retrace. It can be an A wave. We get a B, C to one of these higher fibs above, so 1560 to 1581. But ultimately 3, 4, 5 down to the 1330 area in the Russell before higher. And again, the smaller time frame charts give you just the additional detail of the subwaves and the expected path to that target. Coming across and looking at the European indices, so this is the UK FTSE, and I believe it had its cycle degree wave 4 low back in March 2003. And then the move up since then is unfolding as a very, very large diagonal. So we have an A, B, then the 1, 2, 3, 4, 5 for the C, up into the 2007 high for a wave 1 at primary degree. A, B, C back for a deep 2 into the March 2009 low. Excuse me. Then a 1, 2, 3, 4, 5 for the A of this 3. Bear in mind, in a diagonal, the 1, 3, and 5 all subdivide into ABCs, with the C wave needing to be a 5-wave move. So there's the 3 into the 1.0 extension, which is exactly what we expect for a 3 in a diagonal. ABC back for the 4 with the overlap of the 1. And then this 5-wave structure that's unfolding, it's a messy, horrible, but it is hitting the fibs and it is obeying all the rules. Expecting a fifth up to complete this A to around the 8,400 level in the UK FTSE. And then coming off the 4, which is also back in February 2016, we've got a 1, 2, 3, this expanded flat for the 4, which I think still needs another low down to FTSE 67.65 and then up to the in the 5th for the A wave. And again, if I just come down to the hourly chart, sorry, let's go 4-hour chart. Off the top of the B wave, 1, 2, 3, 4, and then a 5th for a diagonal. And in the hourly chart, there's the top of the 4, ABC for the 1, ABC back for the 2, ABC for the 3, into the 138.2, ABC for the 4, all the way up to the 887 retrace fib. and we should now see the FTSE come down immediately. So I'm looking for a strong move to the downside to start in the UK FTSE on Monday morning. And the invalidation, since we're so close, of a diagonal pattern for that move is the red line here. So we don't want to see FTSE above 72.55 now before we come down and hit our target here at 67.55, which is the 1.0 extension of the bottom up fibs from the daily chart here. Okay. DAX, so German DAX, again, very similar to the FTSE. I've got the cycle degree wave 4 low all the way back in March 2003, and off there, ABC for a 1, so again, a very large diagonal, ABC for a 2 back that didn't come as deep as in the FTSE to give us our March 2009 low. Then this A, B, and I think we're still in the C of primary 3 in the German DAX. And within that, we've got minor degree 1, 2, 3, 4. And off the 4, we've got 1, 2, 3, and this is the final 4 with the last push up to just over the 14,000 level still to come in the German DAX. But I think this 4, very much like the FTSE, just needs one last push down to hit the fib between 11,591 and 11,681. And again, A, B, 1, 2, 3, 4. And off the top of the 4, which is back here, I've got a 1, 2, 3 in a diagonal move. The 3 came down to the 1.0 extension, ABC back up to just over the 764. And again, I'm looking for a strong move down in the German DAX starting on Monday morning to come down and hit this 11,522, which would be the 123 extension in the diagonal to complete it. And if I go back to my daily chart, you can see that it would also, sorry, the daily chart, 4-hour chart here. It would also come down to the 123.6 bottom up fib here for this last subwave, which is at minute degree in the German DAX. So German DAX, one more low, and then we should be done. Same in the UK FTSE. US indices, I still think, have quite a bit of work to do to the downside yet before we see the wave 5 start in earnest, and caveat and all that the pattern can morph into something more complex, and don't get caught in the trap that the FTSE and the DAX have got a bottom at the same time as the US indices. If you look, they both topped much earlier than the US indices. There's no reason why they can't bottom earlier as well. Okay, coming over and looking at commodities, starting with natural gas. So again, long-term weekly chart. I've got a super cycle degree wave 3 high all the way back in December 2005, 1, 2, 3, 4, 5 for a diagonal down into the 2012 lows for the A wave at cycle degree. Now off that A wave, I'm then expecting a B and then a C for the final low in the super cycle degree wave 4. Off this A at the moment, we have an A, B, and I think we've got a 1, 2 in place, and that we should start to head higher in anger in natural gas next. Just coming down and looking at that on a 240-minute chart, if this is the bottom of the 2, you've got this very indiscernible structure up for the 1, which is a highly overlapping sort of diagonal, deep 2 back, which you'd expect after a diagonal. Didn't quite get to this 764 fib here at 25.94, and then another potential 1, 2, which I don't think is necessarily quite done. So if I just look at it on an hourly chart, there's the first 1, 2, the next 1, the 2 could be in here, or we could need a last trip down here to this 786, 764 area. And it's also possible that this 2 is not in. This was an A, B, and we still dropped down to 25.94. So I banked the profits in UGAS this week, and we did rather well. We got out right near the top and banked some decent profits on those. I'm just standing aside at the moment and waiting for some clarity in this pattern to enter a full position in UGAS to the long side in natural gas again. CL. So long-term weekly chart, back in July 2008, I've got a super cycle degree wave 3 high off there at cycle degree A, B, C for the cycle degree 4. So a very significant long-term low in CL back in February 2016. Now off that low, we've got this really messy pattern, which is difficult to count, but This is playing out reasonably well thus far, and we've traded it rather successfully to date. So I think we've got a 1, 2, A, B, C for an expanded flat for this B, and then a C up for the 3 in a diagonal, and that we're now coming down in this 4 of the diagonal. So if I then bring that down to the 240-minute chart, if this is the 3, I think we've got an A wave in place, a high B wave, and the move down we've seen over the last few days is the wave 1 of the C wave of this 4. So we remain short in CL via SCO, the 2 times leveraged ETF. I'm going to consider taking that off this week and then restriking it from higher. So if I come down to the hourly chart off the B wave, I've got a 1, 2, 3, 4, and I think we should drop down here to the 1618 extension at 6097. That would then complete, if I just do it on the 15-minute chart, ABC 2, ABC 3, 4, ABC. That would complete a leading diagonal. Now, as we know, when a diagonal completes, we get a sharp move in the opposite direction, and it should give us a very deep and quick retrace against all of this move down. So I don't really want to sit holding SCO through that move. The levels to watch below us on Monday and indeed this evening as the futures open, 6160, which is the 138.2 extension, and 6098, which is the 1618 extension. The diagonal should finish at one of those two, and then we should commence the retrace. And if you also look, we're getting the divergences that you'd expect to see here on the 15-minute time frame. So I do expect we get a fairly sharp move up this week in CL before we resume the downside. And this then will be the meat of the move that we want to be on board for in the ETFs. Okay, moving over and looking at precious metals and miners. So this is the long-term weekly chart of GC. And going back to the lows seen in late 2015, I've got that as a cycle degree wave 4 low. Then we had this strong 5-wave move up into the summer of 2016, which is either the wave 1 of a much, much larger move to the upside, or it's the A wave of a corrective. And this 4 isn't in. This is the A of 4. We get an A, B, C, and then come down much deeper in GC later on. From a trading perspective, not too concerned in the short to medium term, because off this 2, it looks like we've got a 1 as a diagonal, 2 back, and we're getting a second 1, 2. And there's a decent trade either way to be had to the upside in GC. So we're just looking to get on board for that. For either this, the rest of this C wave up, or the wave 3 to much higher levels in GC. So again, if I've got this leading diagonal up off the second low in December 2016, I've got an A, B, C back for the 2, right into the 50% retrace, another 5-wave move up for the 1, then I think we've got an A, B, and we're coming down in this C of 2. Ideal target 1285. There is a possibility we don't get that low and we simply come down and hit this 50% retrace here as a flat at 1300. So again, if I just come over to the hourly chart and walk you off the top of this. So there's the 1, there's the A, there's the B, and then coming off that B wave, I've got a 1, 2, and I think I had this as a potential impulse down to the 6018 retrace, but it looks to me like we've got an A, B, C for the first 1, 2, and then we've got another A, B, C into the 1.0 extension. And this is a 4 in a diagonal pattern. And then we only come down here. The 1618 is at 1302 and the 50% retrace fib at 1300. So again, got to be on our toes with GC still and looking to get this long entry. But if we come down and hit the 1300 and start to bounce, then I would be tempted. I'd rather see a micro 5 up, 3 back, but often the moves up off the initial lows in the metals can be pretty unclear, and then they just take off. So we may have to be a little braver than that. And we are getting very strong divergences. If this is part of a 3 in an impulse, then we should be getting much deeper MACD readings, which we're simply not seeing at this point in time. So still looking for the long trade in GC. Similar in silver, long-term weekly chart. I've got the highs back in April 2011 as a cycle degree wave 1, with the lows then into December 2015 as the cycle degree 2, which just about got to the 50% retrace of all of this wave 1 up. From there, we've got a diagonal up for a 1, a 2 that actually hit an 886 fib retrace on a very large intraday spike and reversal. So I'm looking to get on board for either this 3, and again, very similar, this could all be an A wave. We get an A, B, C up, but we should still come all the way up here towards the $40 region before we drop down, if that's the case, so that we're looking for the long trade in silver. There's that intraday spike and reversal into that 886 retrace. From there, 5-wave move up here, A, B, C potentially for the 2, but I think it's more likely that was the A of 2. This is the B, and we're still coming down in the C of 2 with an ideal target of 1520 in silver. And then we take off to the upside. Difficulty being, if you can see, this sideways to down sloping GORP here. But it's pointing down at the moment, and I think we come down, hit this fib, and then take off. So that's what I'm looking for to get long in silver. Okay, GDX. Again, I think we've got a cycle degree wave 2 low back in January of 2016 in the GDX. And then this very, very strong impulse move to the upside into the summer of 2016, which is the wave 1 of a much, much bigger move up. Move down here, I still think is more likely an A wave. I've got the Alt 2 there, but I think it's an A. Then we're getting an A, B, C, and I'm looking to get on board for this C of B up here to 28.5 to 29 region before we drop down later this year to the 1778 to 1520 area and then take off in the metals. But coming down the time frames, and let's go down to the daily chart. You see we've got off this low back into December 2016, we got an initial what looked to be a 5-wave move up, and then this just sideways. That's not the sort of pattern one typically sees in a wave 2 position. That's much more typical of a B wave. So I think we've got an A, B, C for a B, and then we drop down here in the metals. And I'm just looking for a final drop into this fib here between 1993 and 20.07 before we start the move up in GDX. And then 60-minute chart, I think the final part of this is A, B, and we should be in a C wave down 1, 2, and I'm looking for it to come down in 3, 4, 5 this week to hit the fib down here. Okay, currencies. So starting with the weekly chart of the US dollar. So I've got a cycle degree wave 3 low all the way back in March 2008, which coincides with the all-time high in the euro dollar pair. And I think from that, we're now in a cycle degree wave 4 back. And off there, we've got an A, B, and this is all part of the C of 4. Within that, we have waves 1, 2, then 1, 2, 3, 4, 5 for the 3. And if you notice that 3 came right up, it hit the 1886 extension, didn't quite get to our ideal target at 105, which was the 2.0 extension. Off there, we've got a 5-wave impulse down. So that's the A wave of this 4. I think we're going to get a very large flat as an A, deep B up to over the 100 level again, and then the C down. And the question here is this A wave yet complete, or does it need a last push down in a 5th wave of the final 5th? So if I come down to the 4-hour chart, this is the 5-wave count down off the highs. And have we got a 1, 2, 3, 4, 5, or is this the 3, A, B, C for the 4, and we drop down to the target would be 86, 82. Not my preferred count. I think the A is more likely in, and I can count a 5-wave move up to here, A, B, C back for the 2, and I'm just looking for another 5-wave move up for the 1 of the next stage up in the DXY. So hourly chart, the 1 is back here. A, B, C, that should therefore be the 2. And I'm looking for the next 5 wave structures. I've got waves 1, 2, 1, 2, 3, 4, 5, A, B. I think we come down a little bit lower this week, but I would like to see the dollar hold between 89.78 and ideally 89.94, and then come up and give us that final 5th up here to 91.07 and take the long-term resistance out at 91. So we need to see that play out. At the same time, if I'm going back over to the euro dollar, we're looking for confirmation that this cycle degree wave 4 peak is in, and that the euro dollar is now headed down to below parity with the US dollar. That would then be to complete, if we go all the way back to the all-time highs here, I've got an A, B, 1, 2, 3 at primary degree, 4, and I'm then looking for this 5th down. Okay, if the dollar is going to make that last low and the A wave isn't in, then it is more likely that we're in the alternative count in the euro, where the bottom is already in, and we're developing a 1, 2, 3, 4, 1, 2, 3, 4, 5 for the initial wave 1 or A wave up off that low. And we'll see a new high in the euro, which would also invalidate the main count as an impulse to the downside. But even if we see that, we would then see a very substantial retrace over many, many months in the euro. So we're looking for a multi-month large swing trade to the downside in the euro. And as you know, I don't tend to play the micro moves in the currencies. I look to get small stakes on and hold them over a long period of time, hence the stalking of these much, much bigger moves in the currencies. Coming down, and sorry, let's go back to this. 4-hour chart in the euro. So if this is the 4 in, I think we've got a wave 1 and then a 2 in place. Then coming down to the hourly chart, if that's the 4 there, there's the 1, A, B, C, 2. Now, we got short right up here the other week, and we've trailed that all the way down, closed those shorts on Friday. It came up through the trailing stop loss. It also had hit our ideal target for this one, which is the 618 fib, by taking the length of the first one, projecting down off the 2. We look for the 1 of the next degree down to hit the 618. So you can see we've come down and done that. I think we're in this 2 back now. So flat the euro now, looking for an A, B, C structured move up to either the 618 or more likely the 764, 786 cluster to get short again for the much bigger move to the downside in the euro. But this was a decent trade when we were in that for a week or two. And I hope you all got on board with that. We got in with a very tight stop and managed to get stop to entry on the same day that we entered. So looking to do similar here. Now, cable. So I've got the pound dollar in an A, B, C, and we still need the 5th of this C wave down to complete the move in cable. And I think this 4 is most likely in. So if I now come down to the daily time frame, if that's the 4, I think we've got a 1, 2, and we should soon start to accelerate to the downside in the pound dollar. Again, there's the 1, there's the 2. We shorted this again. We got in on this second high here. So if I just show you that in the hourly chart, we got in here and we've been stopped out with our trailing stop on Friday as we got this sharp move to the upside. So I think what we've actually got is a 1, 2, 3, 4, 5 as a leading diagonal down, which came down below the 38.2 extension. So met the criteria for a wave 1. I think we're in this 2 back, and this is likely the A wave of it. So again, I'm just going to, if you follow it on the intraday day trading charts in the forum each morning in order to get a tight entry on the swing down for the next leg down. But I think it may take a day or two. We need an A, B, C. So looking for 1.4183 area to get short again in cable. US dollar, Japanese yen. So I've got this in a very, very large cycle degree A wave, I think the cycle degree B's in, which came right up and hit the 764 retrace of this entire A wave down, and that we're now in this multi-month move to the downside in the C wave. Within that, I think we've got the first A or 1 in place, and then we're getting an A, B, C, and at the moment we're just stalking an entry for this C wave to the upside, looking for 119.56 to 122.49 as the ideal target above us in the US dollar Japanese yen pair. And the Hurst cycle indicator tools that we use have been suggesting that that move was about to start for some time now. So we've got the weekly indicator having fired a long signal. Daily this week has also fired long, and you can see we're starting to move to the upside. So there's the bottom of the B wave. I was looking for a larger diagonal down as a 1, 2, 3, 4, 5. Looks like it's not going to do that. We've come down to this 1.0, shot up, taken this out here. Which was the 107.30 level that was our invalidation of any further lows. So now, off the 60-minute chart, if this is the bottom of the B wave, I think we've got a 1, 2, 3, 4, 5 up into the 1618 for a leading diagonal up. We should get a deep retrace. So I'm looking for the 105.24 area to get long the US dollar Japanese yen. And again, I'll be using the intraday charts in the forum in the mornings to try and get a nice tight swing long entry in this pair. And again, a very, very substantial move to the upside that we're looking to play. Australian dollar. So I think this is in a very, very large diagonal pattern up off the 2001 low. And we have an A, B, C for a cycle degree wave 1, an A, B, C for a cycle degree wave 2, then a 5-wave move up here into the 2011 high for an A wave, A, B, C back, which came down and hit the 786 retrace as a B wave, so the 786 retrace against the A, and that we're now in the initial wave 1 up of this 3, or this C of 3 rather, so target's much, much higher, and this 1 is unfolding as a very, very messy diagonal. So daily chart, off the bottom of the B, I've got an ABC for the 1, ABC for the 2, ABC for the 3, ABC for the 4. Then I think we have an A wave. We're a hair's breadth from finishing this B wave, and then we can get long again in the Australian dollar for the C up to the 84.89 region. So here we are on the 4-hour chart. If this is the A wave, I've got an A, B, C for a W, X, and we're coming down in the Y wave now as an A, B, 1, 2, 3. This is a 4 in a diagonal. It needs to drop down one more time to 75.72. And then again, off the X wave, A, B, 1, 2, 3, 4. And I think we've got an A, we'll get a B, C down this week, I would hope. And then we can look for a swing long position in the Australian dollar. Bitcoin. So weekly chart off the all-time low back here at 0.03, which is all the way back in 2010. I think you've got 5 up to here for a primary 1, 2. Then at intermediate degree, we've got a 1, 2, 3, 4, and we're now in the intermediate 5, within which we have minor degree 1, 2, and 3, and we're now in this 4 here. Now, within that 4, so there's the top of the 3. I think we have an A. We're still in this B, and then we drop down to the 24.74 area to complete the 4, and then up. 240-minute chart. There's the 3. I've got a diagonal down for an A wave, A, B, and I think we need this C up into this target region at 12.552 to 14.962. Then we drop down much, much lower in Bitcoin. And then just coming down to our hourly chart this week, there's the bottom of the A, B, and this is the support zone it had to hold. It was threatening it late on in the week, but you can see it looks like we have our first small 5-wave structure up without quite getting back into the support zone. So that this low has held so far, and we should get a small 2 back and then up. You need to see it take out 75.54 for confirmation that this low is any good if you trade Bitcoin. Okay, next thing I want to do is just take a quick look at the sectors. So I have updated these on the site this weekend, but XLK, okay, I'm just going to go through the final parts of the pattern. I think we've got the minor degree 3 in here, and we're getting an expanded flat for an A, B, C for the 4. So I think we've still got lower to go in the technology sector. And if I can bring it down and look at it on the daily chart, there's the 3, there's the A, B, ideal target down here at 59.86 to 59.12 in XLK. So still lower to come. Need to see it take out this 62.83 area this week and head on down. XLF, let's come here. Now, XLF, this is the one that worries me. This can all be done here. At the moment, I think we're just getting a 4 back. We've got an A, B, C, which will ideally hold the 25.90 area in XLF. And then we get one last push up to complete what I think is a B wave. And then we're going much, much lower in the financial sector. Here it is just drilled down into the daily chart. So there's the A, B, C, okay? If we break below 24.49 in XLF, that would be a very, very serious warning in my mind. And if I look at some of the stock charts in the XLF, so if I come and look at JP Morgan and ignore the daily chart, I'm just going to go and look at the weekly chart here. Off the 2009 lows, I think this is all an A, B, C as a corrective. And you can see within the C wave, we've got 1, 2, 3 up into the 1618, 4 back into the 1.0. And you can get a completed, you can count that as a completed 5-wave move. I think it looks better as a 1, 2, 3, 4, then a 1, 2, and this is a 3 with a 4, 5. And we could get extensions in this up to the 139 region. And I think if we're going to see the highs we're looking for in the SPX and the Dow Jones, we need to see that in XLF. So I'm watching XLF particularly carefully, and certainly some of the banking stocks within it for early clues. We may be a degree off in our counts in the index. It's really, really not my expectation at all. It's not what Hurst is telling me. It's not what the Elliott wave and Fibonacci levels are telling me. But it would be foolhardy not to watch out for signs that they may be wrong at this stage. And also for those of you looking to add stocks to your portfolios as we come down, I will do an updated video on the stocks on our watch list and more detailed drill down into the sectors later this week, but also some suggested hedges that you can put on. I would suggest you look at hedging your entire portfolio with put options on the indices, but also do it sector by sector. So if you're going to be overweight in certain technology stocks, then look at taking a small hedge on the XLK using some put options. And we can always play around with buying and selling at different strikes over the next few months to manage those at the same time. But it would be, it's not going to be as straightforward as this wave 3 up has been in the indices and therefore in stocks. But just looking at JP Morgan, what I'm looking for it to do is hold this 104 area and then push up one more time in JP Morgan. And just go through the others briefly. So Kleinwort Benson, again, weekly chart. I think we're going to come down here. I'm looking for it to hold this 39 to 40 region and then push up one more time in Kleinwort Benson. And you can see here's the count for that. So we've got a 3, 4, 1, 2, 3, 4, 5 for this 3. A, B, C should come down a bit lower and then we go up. But I don't think there's huge upside in it. And again, it's hit a 2618 here. It's hit the 2236 off the larger degree fibs, and we're a hair's breadth from this 53 area, which has been the long-term target in this stock. So again, I'm not going to touch any of the banks in the financial sector in terms of going long. If I just look at WFC, again, let's just take it on the weekly chart. I think we're getting this A, B, C pattern, and I do think it's got higher to go up here, but this is messy. So off the B, I've got a 1, 2, 3 into the 1618, 4, and this looks like it's unfolding as a diagonal. So we've got an A, B, C for a 1. Coming down to the daily, there's the 4, A, B, C. Then this is the 2 back, A, B, C. It needs to hold 47.66, worst case 45.70. And if we break down below 43.50, then that is suggestive that we've seen the top in WFC. So just watching that one as well carefully for early clues. Bank of America, again, starting with the weekly chart, I've got a cycle degree 1, 2, A, B, C. So I'm only looking up here to around the 40 region in this stock at most. And even within that, I think that we're going to get a 3. This is the 4, and it needs to hold here at the 28.5 region and push on up to give us this 3 before we get the 4, 5. The concern is that this 3 is already in here at this 2618 extension, and we're already in this 4, and we're going to come down quite a lot lower in Bank of America Corp as well. Goldman Sachs really does look like it's top to me, and that we've got an A, B, 1, 2, 3, 4, 5 for this A wave right into the 2618, and we're going to get a much deeper pullback. Now we can get a small 4, 5 up to the 294 region, but I'd be very surprised to see Goldman Sachs trade above 294 before we get a much deeper pullback. And again, bear in mind this is a weekly chart, but look at the MACD. So we've got huge divergence going on here. So do watch the main banks and the XLF for early danger signs in the sectors. So sorry, that's XLF. XLE I'll come back to. XLY, so again, weekly chart. And I do think we've got a 3 up into the 223.6, A, B, C. We should hold between 91 and 95, ideally 94.30 to 95.30, and then push on up here in XLY. Just bringing that down to the daily chart for you, A, B, C, and then we push on up to, I would think, around the 122 region in XLY before we get the much deeper pullback in the primary degree 4. XLI, which is the industrials, 3, 4, and then we come up here, 96.10 is the target. I'd like to see it hold 71 in XLI. And again, just boiling it down to the daily chart, A, B, 1, 2, 3, 4, and it should come down here to either this 70.25 to 71.12. I guess 68 to 67.5 to 68 would be okay. But if we get much below that, again, that would be an early warning sign in the industrial sector. XLV, healthcare, A, B, just looking down here, 75 in the diagonal, and then up in healthcare. And XLP, again, off the 3, A, B, 1, 2, 3, this should be the 4, and we drop down here to the 49.90, and then looking up to around the 61 area in XLP. Let's say all these charts are now up to date on the site. XLE. Okay, so if this is the 1 up, bear in mind this is all a very large diagonal. 2, 1, 2, 3, 4, 5 for an A, B. So I'm looking for a 5 wave, C wave. If that's the 1, I'm starting to think this isn't the 2, that this is the A wave, and we're in this alt 2. So we have an A, B, and then this would be another A. We get a move up in the B and down in the C. So if I look at that here, this is an A wave, A, B, C for the B wave, A, B, and then we come down. And what I'm looking for is a move up to around 72.75, and then we resume the downside in XLE. And if I come over and look at the stocks in there, if we look at XOM, XOM is such a huge part of XLE, and I think we've got an A, B. Sorry, if I just put this onto a weekly time frame. So off the 3, 4, A, B, C. I think this is coming down to the 60 region in XOM. And if I just then take that back down to the daily chart, A, B, and I think we've got an ABC 1, 2, 3 into the 1.0. So I'm looking for a bounce from the 71 area up, which would also give us our bounce in the XLE, and then down here in the 5th to finish off this B wave in XOM. Now some of the others are looking a little more constructive. So this is CVX. I think it's already completed an A, and we should come up here 123, but then down to the 89.90 region before it sees any more upside. SLB is still pretty undecided. I think we've probably got the A, B, and we're coming down here to the 44, 45 region in SLB. It would have to hold 61, and I can't see it doing that now in SLB. And finally, Conocophillips. Now, I think this is an A, B, and then we've got a 1, 2, 3. We should get an A, B, C in the diagonal. So I'm looking for a move down to between 46 and 48 in Conocophillips before we see any more upside in this stock as well. So again, messy patterns in the charts in this sector, as I said when I did a complete sector review. This is Halliburton, by the way, which I think is going to come down here to at least the 32.5 area before we see any more upside as well. Mixed bag, messy patterns, and XOM, I think, fairly clearly going down further. So I think we get a B wave up in the XLE itself, and then down to a new low beyond last year's lows in that ETF sector. And then the other thing, finally, just to look at this week, there's a couple of stocks here. So these were from members that wanted me to look at range resources. So this is the weekly chart. We have a 1, 2, and I think this is a primary 3, and we're getting an A, B, C. This 4 should just come down one last level to 964, which needs to hold 964 to 955, and then we should head on up. So that's entering its buy zone. The nice thing here is you can use a nice tight stop, and if I'm wrong, this is a 3, 4, 5. I think that we've got an A, B, C for an A of a deeper pullback. We should still get a B wave up, which is a decent tradable move. But look at the technicals as well. So this is, I think, close to a decent buy in range resources. Then HUD Bay Materials. So off this low back in 2016, I think we have a 1, 2, 1, 2, and this is another 1, A, B, C, looking for this move down to the top of the target region here, 625. And it could come down a bit further, but I don't think so. I think we've got a 1, 2, 3, 4, 5 as a final ending diagonal for this C wave. So ideal target 625 to get long in HBM. McDonald's, for those of you interested in a potential short, there's the A wave here. I think this B might just tag up a little higher to 165, doesn't have to, but I think it's going to come down here 125. So somewhere between 125 and 132 is the target in McDonald's. It's all the way up at 165 at this point in time. And then the others that I wanted to just give some warnings on this week. Where is it? Facebook. I'm looking for Facebook. Okay. I know that a number of you got long Facebook off the daily chart from the site. So we were looking for the 4 to come down here to the 149 area, and it did that, and we got this strong bounce. Now it's possible that this 4's not in, and it still comes down to 146, 142, even as low as 139, and we didn't get any divergences at the low. Okay, now this is a stock, I flagged it in the update and I've put the charts out, but said that I am not personally interested in owning this stock at this point. Bad news tends to come in 3s, and I think we've got further to go with it. But just to forewarn those of you that are long already, you've got Zuckerman in front of Congress this week. He's being quizzed about something. And that can go either way in terms of a news item. You could see the stock accelerate up, as we've seen in Tesla, or you could see it tank. So just be on your toes in Facebook if you've taken the long position off this low down here. Okay, and below us, watch 146, 143, 142, all the way down to 139. Okay, if this morphs all the way down here to 131, then this is over in Facebook, in my opinion, and we're going a lot lower. Do bear in mind, of the weekly charts, this is all of this move up off the lows back in 2012 in Facebook, I've got as a cycle degree wave 1, and I think we come back to 31 to 45 when it's done. So there's a massive amount of room below us in Facebook, and then typically it's going to spend a long time basing before we get the next leg up in Facebook. And similar warning for any of you that took the position in Tesla. Okay, so I was ideally looking for 240 in Tesla, and we came within a hair's breadth of it. I did personally buy some, not a lot. It's not one I want to risk much on, and it's also possible that we've got a 1, 2, 3, 4, 5. We need to clear 312 and then 322. Okay, otherwise this can come on down again to that 240, with the caveat that it could go to 210 to 214. So if you're long Tesla and you've got decent profits, we're going to get a pullback shortly anyway, because this will be a 1, 2. I think this will be the top of the 3. We get a 4, 5. So tighten stops or hedge it. And what you can look at is buying something like next month's 270 puts, which would give you the hedge, but they would also quite likely be profitable. You could also buy the 240s dated out to June, and then turn that into a spread as we get the pullback. So you would sell the 270s for a profit, and when we get down a bit lower than that, if we get a wave 2 pullback here, you would sell. So you've bought the 240s, you could sell the 220s, 230s against them, and probably get most of the premium back once this has already dropped some below the 270 again. And that would give you a free hedge on the rest of your long shares position. So that's how I'll be playing Tesla moving forward from here. Okay, that's it from me for this week. I will be back tomorrow in the forum first thing, and then the live room tomorrow afternoon.